Good evening. Bruce Blood, pensionsolutionscanada.com. Bond yields are up. What does that do to your, is that any better? No, I can't see you. What does that do to your pension options, your commuted value, and the copycat annuity? We know many companies offer three choices. Sorry. Your company pension, the commuted value, and the copycat annuity. By the way, the copycat annuity is not available if your company doesn't offer a commuted value, because the copycat annuity, of course, requires the cash to fund it. So anyway, let's update this. Bond yields are up. What's that done to us? So first of all, you finished your 30 years or whatever you have, or maybe you haven't finished it. You're going to take your pension. We need the options pages. We need the whole package. Send us everything, and please scan it. Don't take pictures on your phone, because we have to flip it over to funders, insurance companies. Okay, so option one, company pension. Your dad took it, your mom took it, your uncle took it, your aunt took it. People. My guess, it's the most popular option. Anyway, you take the pension from the company, and God bless you. I think the only thing I would say is you're going to turn 80 someday. Is the pension plan still going to be there to pay you? Enough said. So where we come in is options 2 and 3. So let's do this in this order. Commuted value. So the issue these days, late 2022, is that bond yields are way up. Bond yields, look on Google, Government of Canada 10-year bond yield, and you'll see the chart looks like this. They were down Christmas 2019 at about 0.5%. The government was getting 0.5%, getting the money, paying 0.5%. Anyway, that's up to about 3.5. And check the history. You'll see that the long-term average yield on a 10-year, and actuaries look at a range of bonds, but just let's talk about the 10-year bond, is 4.33. So we're technically still below the long-term average. Anyway, it's gone from 0.5 to 3.5. That's had a dramatic impact on your commuted value. So guys and gals, who retired, let's say late 2019, 2020, those are the golden years, golden days of commuted values, because actuaries had to sit and say, well, we're going to need a lot more cash to pay this person their pension for life. So the commuted value was high. Anyway, I started by saying bond yields up, commuted values down. It's a teeter totter. Where are bond yields going? I don't know. I wish I could say. Where's the Government of Canada going? Where, the Bank of Canada, rather. Where's the Fed in the U.S. going? Where are other central banks going? Well, we can ask them. We can try to read the entrals. And I think the general consensus is that yields still have a ways to go up, or interest rates, if you wish, because inflation is still high. And the banks have taken it as their credo to contain inflation, to wrestle it back down to the ground, 2%. Anyway, I'm rambling a bit. So your commuted value is going to be lower. It is what it is. Okay. Send us all the paperwork. We'll do a calculation, see what sort of rate of return you need to get the same money out of the commuted value as you would out of your pension. Okay, that leads us to the copycat annuity. And somebody said to me, I don't know if you can do copycat annuities anymore because the commuted value is so low. But we can. In fact, I ran one today. There's close to a 10% cash surplus. 10%. Okay, it's only 9, but for argument's sake, it was very large. So the answer is yes, copycat annuities are still being issued, even with these lower commuted values. So why? Well, picture, you've written exams in high school or university, and the room's full of everybody, right, answering the same question. Well, imagine you have a room full of actuaries, and they have to all answer the same question. And the question is, we have to pay out a set amount of money every month for this person's life. And this person is, pick an age. All the actuaries get the same age, the same pension. And there's a partner, and got to make allowance and so forth. The question is, how much money do you need? Well, the actuary looks at his tables or remembers them and says, oh, well, rates are up, so I'm going to need less. And that's what's happening. Even though the commuted value is lower, dramatically lower, the actuaries are using a different rate of return and still able to issue copycat annuities. So that's my main message today. The copycat annuity, just to go over that, is where an insurance company, let's pick on Canada Life, take on the obligation to pay you for life. The reason we like it is because, well, it's our business. Okay, I get that part. But the other reason I like it is that you are going to draw a pension, maybe for 30 years, maybe more, from a Canadian financial institution, not a private company, subject to the whims of the marketplace. Anyway, it would really appear to be much more stable. We quarterback the process. We process all of the paperwork, make sure it gets set up, either the commuted value or the copycat. We have a look at your other investments. Do you have any RSPs, TFSAs? Do you want any? Do we need to do any tax sheltering, tax planning? What time of the year should you retire? That's a big one sometimes. And CPP and OAS, you know what? Start it late. Anyway, that's the message. So thank you for watching. Bruce Youngblood, PensionSolutionsCanada.com. Come on our site. My pretty face will pop up, and you can schedule a 15-minute Zoom to talk about you. Thanks for watching.